Here's what happens in interesting times. Economists always say they don't get controlled experiments. We're about to look at what happens when a country leaves a peg. This is Carmen Reinhart, an economist, but also an economic historian, writing in Bloomberg View this morning. She looks back at other examples of losing a currency peg and writes about what Greece can expect. Capital flight in these cases, she's looking at Argentina, Mexico, Peru, was typically underway before the conversion, but it continued during and after, often at a faster rate and despite capital controls. The implication is that conversion failed to establish confidence in the stability of the new currency. And these numbers that she offers, she looks back at Argentina, Tom, the capital flight was before dropping the currency peg, 2.9% of GDP. During the year was converted 6.0. The year after, 12.0% of GDP. So you can't say we're going to lose the peg, we're going to install capital controls, problem solved. It doesn't work that way.
And where Reinhart and Rogoff differ from so many is they're waiting on private debt, and that's what get Alan Ruskin's attention at Deutsche Bank. This is not the vacuum of Greece and the garbage owned by those other governments. It's a much greater story that Professor Reinhart and, again, someone like Dr. Ruskin at Deutsche Bank would talk about.
Right, and she's looking particularly at Latin American countries, for example. But I'd love to see somebody look at, say, the breakup of Czechoslovakia. How did that go when they broke into, the Czech Republic and Slovakia?
Yeah, and the other is, as we've mentioned before, they're not an island like Iceland or Cyprus. I mean, there's something different going on here.
So the other thing that you learn, sort of looking back at the history of capital controls, which she points out in this article, is that they're very easy to put in place. They're really difficult to get rid of because all of monetary policy is based on trust. So when that is eroded, and Iceland is figuring this out right now, it's really hard to get those capital controls out and hope the currency remains stable.
Yeah, Carmen.
Iceland didn't have to change its currency.
Yeah.
I mean, that's a big deal. Psychologically, they're euro.
Good point. The idea here is, and the amount of euros floating under mattresses. And in suitcases, I mean, Chris Grisanti, the big distinction here is all those euros floating around Greece and in their accounts across the border.
Right, and not only that, but you're going to switch to a currency that has been defamed. Who wants a drachma? So that's going to be a real tough
And
problem.
it will be that price will be set within, like, what, 3 seconds?
We're already seeing this pre-capital flight behavior. People, this is reported in the New York Times this morning, people are frantically buying appliances because they think they'll hold their value.
Yeah,
That's
we did
happening
a
in
report
Greece
yesterday.
right now.
They were buying Macs.
Yeah.